Last week, global share markets made gains for the first time in 5 weeks. They were driven by news out of Greece that the EU will sit in behind them and try and help them out with their government budget issues. However, later on in the week, global share markets did make a dip after news came out of China that they will again try to cool off their economy. Many governments around the world are talking about removing some of their stimulus packages. China, on the other hand, are already beginning to do so. They have instructed their banks to hold more deposits in order to restrict their lending. They are facing high inflation and very high growth rates for 2010. The New Zealand dollar has been trading a little bit lower over the past few weeks. Expectations had been that the US economy will be weak for some time yet, while New Zealand's economic recovery will be a little bit stronger. The currency game is a relative game, and New Zealand is looking relatively better than the major currency powers. However, data out recently has indicated that the US is looking a little bit better while we are looking a little bit more shaky. Expectations are now that the cash rate will be lower for a longer period of time. As such, last week we saw the New Zealand dollar trade down to 68 cents against the US. It has since rebounded with the global shake-up with equity markets last week and is currently trading at 69.75 against the US dollar. US beef prices spiked again last week as cold weather swept through the US once again. It has been a very tough winter in the US and processors have been finding it very difficult to get stock into their plants as well as staff. Over the past few weeks we have also noticed average weights have dropped off as the cold weather really affects the cattle. As such, US imported prices have increased 6 cents last week alone. This has been good news for local schedule prices which have also increased. The lower New Zealand dollar as well as this tight market is good news for local farmers. However, with demand still down in the US, this is likely to mean that these scheduled prices will be capped in time.